Hello viewers, Namaste. Today we are going to see SIP returns in the past 10 years in large and mid cap schemes. What is large and mid cap? Large and mid cap funds are a type of funds which invest at least 35% in large cap stocks and another 35% in mid cap stocks and the rest in any capitalization. It could be large, it could be mid, it could be small or combined. All of these things combined. Then now why 10-year SIP? Just when I say 5-year, I think 5-year is too short a period for equity investment. If I say 15-year, 20-year, youngsters say that it's too long, we can't wait that much, we want to see something quicker. So I have compromised myself to give this presentation of 10-year SIP returns. And this large and mid cap category and all other categories were defined by SEBI 3 to 4 years ago. Earlier to that, some of these schemes were mid cap schemes, some of these were large cap, etc. etc. Say for example, in the table given in front of you, the topmost scheme is Mirae Asset Emerging Blue Chip. It was earlier a mid cap fund that has been converted to large and mid cap. Similarly, there are other funds which have been converted into large and mid cap category. So it has given higher returns does not necessarily mean that in the last 10 years it was a large and mid cap category. So this Mirae Asset Emerging Blue Chip Fund has given a wonderful return of 24.15% year on year on a compounded annualized growth basis. If you had invested 10,000 month on month for the last 10 years in this scheme, you would have invested 12 lakh rupees. That 12 lakh right now is worth 38 lakh 25,561. Hence, the profit as given in the rightmost column is 26 lakh 25,561 rupees, or approximately 26 lakh 25,000. Similarly, Canara Robeco Emerging Equities Fund, it has given a wonderful return of 21.68%. The current value is close to 34 lakhs. The profit is close to 22 lakhs. Similarly, Principal Emerging Blue Chip, the current value is close to 32 lakhs, 31 lakh 70,000. The profit is around 20 lakhs, or to be specific, 19 lakh 70,927. Most of the schemes have given very good returns. The lowest return or the bottommost fund in this table is Nippon India Vision Fund, which has given an annualized return of 12.72%. The value of 12 lakh worth of investments over a period of 10 years is worth right now 21 lakh 80,000, and the profit earned is 9 lakh 80,000. Overall, any of these schemes have given much better, superior returns when compared with fixed deposits or bonds or any other government savings schemes. Anything you can compare on the debt side, debt segment, or even insurance schemes. Many of these funds have given wonderful returns. Okay, now a person may say, I don't know, I have where to put that money, so how to understand the return I would have gotten. So a simple thing is averaging. I have given in the last line average returns. Average return is 16.25%, and average value worth of the 12 lakh investment would be around 26 lakh 19,105, and an average profit would have been 14 lakh 19,105, which is 16.25% is again a wonderful return over a 10-year horizon. So here I have not given any of these funds as a recommendation or suggestion. Just I have done an analysis and I am presenting that analysis in front of you. I have taken all the schemes, and the table in front of you covers all the schemes that were in existence 10 years ago. The main purpose of this video is to encourage investors to invest in mutual funds, equity mutual funds particularly, for their longer term goals, maybe 7 year, 10 year, 15 year, 20 year, which whatever goals that are 1 decade or 2 decade away from now. It could be your retirement, it could be your son's education, daughter's education, son's marriage, daughter's marriage, or philanthropy, whatever it could be. So for longer horizon, equity mutual funds, gives you better risk adjusted return. Yes, there is risk in the short term. As we say, mutual fund investments are subject to market risk. So it will have ups and downs, but for longer period, longer horizon, mutual fund investments perform wonderfully. And I wish each and every one of you who are viewing this video, if you have not already invested in mutual funds, to seriously consider investing in mutual funds in India for your longer term goals, so that you can also participate in the India growth story. We all say that India is growing. We see in the news India is growing. We all feel and we are earning much higher than what we were earning 10 years ago. Our salaries have increased. Everything has increased. So to participate in this growth story, you must participate in the Indian stock market through equity mutual funds, which is a very disciplined investment. And equity mutual funds also carry lower taxation as compared to fixed deposits and bonds and other debt instruments. In equity mutual funds, up to 1 lakh of profit per year per person is tax free. Over and above 1 lakh, one has to pay 10% taxes irrespective of his tax bracket. Thank you very much. See you in another video in another time.